Welcome to the SoCal Real Estate Development and Syndication Podcast. Available on Apple Podcast, YouTube, iHeartRadio, and Spotify. If you would like to stay in the loop of our next opportunity, please email ppbarakoff@hotmail.com. Do not forget to like, subscribe, and comment. Now to welcome your host, Peter Barakoff.
Welcome to the SoCal Real Estate Development and Syndication Podcast, from blueprints to skylines, where we interview the go-getters in the industry. I am your host, Peter Barakoff. Today's guest is Dani Beit-Or, founder and CEO at Simply Do It Guided Real Estate Investing. Thank you for coming on, Dani. How are you?
Very good. Thank you. So glad to be here.
Oh, great, great. Can you tell everyone a little about yourself, your background?
Yeah, absolutely. Pleasure. I'm originally from Europe. I moved to the States in 2004 with my wife, just packed our bags and decided that we want to move to the States. The main trigger for me wanting to move to the States, I know it's going to be maybe a shock, but I wanted to pursue real estate, US real estate, because as a young engineer working for high tech. I was actually earning well as a young engineer and started investing very small, buying a one single family home in the States. But I fell in love with the concept of US real estate. And US real estate for me, it's kind of when I get opportunities to talk about it from this, always reminds me of the things that even me, living in the States for so many years, are just taking for granted. There's so many beautiful things about real estate here that I wish people would have more perspective as a foreigner to understand the amazingness that real estate has to offer here in so many ways. I mean, I'll be happy to elaborate, but kind of in short, I moved here in 2004 to the San Francisco Bay Area at first for the first 10 years, and then 10 years later to Southern California with a very clear dream to continue and pursue real estate investing for myself, for my family, and hoping at the time that I will be able to be involved with helping others do the same, which luckily for me did happen. I was able to help many others follow the same tracks that I put for myself, lay down for myself.
Being from Europe, how did you hear about American real estate, or what inspired you? Did you read something? You see something on TV? Like, how did that bug get to you?
Yeah, it's kind of funny. It's only been 22 years since I made my first investment, and a whole different world of technology and information. Um, what put me on the path was, as a young engineer, I I found myself while being in school, still getting my degree. Halfway through the 4 years degree, I found myself in a relatively big debt at the time. And it was kind of very humbling to realize this. I'm saying relatively big debt because today it looks like nothing, but back then it looked like a terrible thing to be in. And it was very humbling because, like, I wasn't sure exactly how I got to this point and how could I have prevented it and what mistakes I made along the way. It made me understand that I'm just starting my adult life after my military service and after getting almost finishing my degree. And I felt real life economy or economics illiterate. Like, I barely knew like retirement plans. I knew the name, and that's it. The different retirement plans and programs and and taxes and social security and all those things that we all know, but I felt completely illiterate. And I actually, for the following 2 years, I was already working while being a student. So I was actually earning nicely for a student. Wasn't a lot, but nicely compared to my to others at the time. And I just created this kind of recovery plan for myself to get myself out of debt. And part of that recovery plan was a financial aspect to it, and there was also the knowledge aspect of it. So I was on a path to get myself out of debt by myself. I didn't use any mentor or anything. I just kind of created a plan for myself. Literally, I wrote one for myself. That 2 years later, I was no longer in debt. I was able to save a little bit, not a lot. And the most important thing aspect of that recovery plan, that the mantra, the vision of the plan was every dollar I'm spending, actually I even consider less than a dollar that I was spending at the time, I had to fully justify that spending. So it has to be making perfect sense. There's no just spending, right? From coffee to sandwich to whatever. And can I spend it more wisely? So on coffee is one thing, but when I started negotiating with my financial advisor on different, at first I wasn't negotiating. I was just sitting there and listening, taking advice and feeling like an idiot. And then as I progressed my knowledge, I got more knowledgeable. I was all of a sudden the conversation with my financial advisor was, wait, hang on a second. Why are you offering me this option when there is another option which could be benefiting me better? Or why would you take this kind of a fee here when we can restructure it, and then yes, you will earn less money for my fees, but I need to look out for my own interests. And all of a sudden, within 2 years, that conversation with my financial advisor completely changed how the dynamic of the conversation was, from me sitting there and listening and taking some, like a deer in the headlights, or all of a sudden I'm kind of steering my own financial, vehicle, with him being, and I being a part of it. And I remembered one of the last conversations before I moved to the States, the guy turned back to me and he said, Danny, for some reason, from day one that I knew you, I always had a feeling that one day you will be sitting on that other side and start asking me very good, difficult questions, difficult in the sense that I need to think how to solve what you're asking. And you absolutely, I always thought that will happen. And that day came, and you know what? From one meeting to another, I can see that you are challenging me, and I love it. And I think I need some time to answer you, how to strategize the same questions that you brought up. So for me, that was like he wasn't my nemesis in the sense, because he's such a nice guy and we were really in good relationship. But he was my bounce, right? I had to break that barrier, kind of a knowledge wall, and he was it at the time. Since then, it continued to other things, but so that kind of what gave me the opportunity to, it put me on a path of learning and wanting to learn and wanting to understand better and diving into the details. That was just the ramp up to starting to look for investment opportunities. And what started in options and stocks, like many people do, all of a sudden I felt that this is not good enough for me. This is maybe higher risk, doing options, lower potential. The risk reward ratio wasn't working for my personality. And I kept looking. I looked at Forex, I've looked at this, many things, eventually ending up with US real estate. Someone talked about it. I listened. I'm like, that makes sense. That actually makes a lot of sense to me. I had to probably watch that person or others talk about it. And there weren't many at the time. It was very rare. Not like today that you could probably sit on a meetup every evening listening to either podcast or some lecture about it. And it was not that was not the case at all. And I've listened and started researching a little bit online. Remember, Google was a startup back then. And that led me to eventually, asking myself, how long am I going to talk about it or think about it? When am I a doer, or am I a talker, or am I a walker? And that's where led me to my first investment, and that opened up the gates. It's somewhat funny that when I made my first investment, completely out of, in different country, different language, different culture, different laws, different everything, different time zone, right? I was in Europe. This property was a single family home outside of Phoenix, Arizona. Sight unseen, completely sight unseen. And few months later, maybe 6 months later or so, my sister came to me and said, hey, there's this book here. I think you're going to like it. That was Rich Dad, Poor Dad. And funnily enough, I read the book 6 months after I bought my first property, and he does mention Phoenix, Arizona, right? So it's kind of funny that to read a book that you're already doing something. Um, in 2005 and six, I think I even had an opportunity to meet him in person during a very intimate reception of one of his events. I was there, so that was nice to kind of meet the person. But that was kind of what put me on the track to U.S. real estate. When I fell in love and eventually said I want to do that, I found that avenue of investing in real estate in the U.S. much more attractive than my alternative, being some engineer in a high tech company. No offense, it was just not the right suit for me, literally.
That's brave of you. That's very brave of you. Sight unseen, whole other country, and just go at it.
Yeah.
Congratulations. And that's
Yeah.
that's your first real estate investment. Then what happened after that? How did then
So when I bought this one while in Europe, I then end up moving here to the States, and by that time I was in Phoenix on business, and I went to see my house. I used to call it, I don't know, I no longer own it, but I used to call it my little zoo in Arizona because it had um, a couple, four kids, two dogs, hamster, and a bunny. And I gotta say, when the first time I was there and I saw it, I freaked out, right? I left the house. I'm like, oh my God, what's happening here? But after letting things digest a little bit, maybe a day or two, I kind of I told myself, your little zoo in Arizona, it's kind of interesting that they're already been there at the time, maybe 4 years, 3.5 years or 4 years. Um, they were late once to pay the rent, which is actually quite shocking. When you run a zoo and you're late once on your rent, that's impressive. They were late and they paid late fees. Things happen, no big deal. They stayed 5.5 years in this house. So that wasn't a bad experience with having a little zoo. In those 5.5 years, they were in total late twice to pay the rent, just twice. So it's okay. So that little zoo was actually very stable in terms of uh, consistent tenant paying on time. Listen, they probably knew who would take the zoo. What other person will take a zoo and rent them their own house, right? You got to be a little bit crazy. So that was since 2004. That house, after I purchased it, 2002, maybe and others, what happened in 2000 and kind of 4, 5, 6, 7, 8. Well, until 8, it pretty much doubled in value before the crash of 2008. I was able to pull cash out twice, probably, I think twice. And that cash bought me at least four more houses. So that house alone was converted without selling it to four more houses. And that was kind of the path of just using equity in one house and continuing to more properties. That is a nice story and a very good story until 2008. So everything completely changed. I was able to accomplish my 5-year plan or goal within 2.5 years, and then the crash came, and the crash completely reset everything. The crash didn't just reset everything. In a way, it pushed financially, it pulled me backwards. Knowledge wise, I always, for me, I'm a graduate of the 2008 crash. That was my PhD in real estate investing. That taught me so much. I found myself diving into nuances of so many issues and problems with lending, with other things, with management, my own systems and processes. I had to kind of refine them better, to do them better. So I came out of the 2008 crash around, licking my wounds, right, for a few years actually. But I completely ramp up my business, my operation, my systems and processes. I had to strengthen every foundation of my financial, I'm sorry, my real estate foundation. I had to make sure my analysis is better. How I check properties is different. How I check teams that I work with, property managers, realtors, etc. it was a complete makeover of the business as a real estate business to make sure it's stronger, it's better, it's more cautious, and in a way that was it's hard to look at a crash and how it affected me financially as a blessing in disguise. I can't say it's a blessing in disguise, but it wasn't all curse and bad and terrible because I was able to really improve my operation. And because I work with a lot of investors, I'm able to harvest that terrible experiences and others and bring it to our operations. So hopefully the ones that we work with, the clients that we work with and help them invest can benefit from our mistake, avoid mistakes if they will listen. And many of them do, not all of them all the time, but those who do and they're at least considering my opinion and my experience, hopefully they are not hopefully we know their starting point and their ability to increase or boost their success, goes the chances are going dramatically up.
So I assume that's at that point you started simply do it guided real estate investing. At what
Right.
point did that get started?
So I was already helping investors invest out of state. All I've done for those 20 plus years is helping others invest out of state, right? I've been doing only out of state. I live in California for all those 20 some years, 20 plus years. But truly, Simply Do It was born with all those changes, significant fundamental changes after the crash of 2008. Around, I think, late 2010 is when it was officially established to kind of make it more of a proper organization with logo and name and systems and processes and website and everything.
Well, so what do can you explain the concept of what you do, how you help people find out-of-state deals? Like, can you take us through that process?
Yeah, absolutely. Absolutely. So many investors who understand that the real estate, any real estate, can be an amazing vehicle, right? Real estate can be an amazing vehicle. We all know that. That's why we're probably here and talking about it. And that's regardless if you do out of state, in state, residential, commercial, whatever. We know how powerful real estate can be. The problem is with many people is that when they realize that they understand the powerness of real estate and they want to act on that powerness for whatever reason, right? Is it because they want to build something from themselves for retirement? If it's because they want to build something so they can use or leverage for their kids or even grandkids college education in 10, 15, 20 years. If it's just to diversify from the stock market. I get a lot of people that I am so in the stock market, I need something else to diversify, right? So everybody has their own reason or reasons. Many of those people, they wake up or they decide that they want to go and act on it, and then they're getting stuck because a lot of that acting on it means I'll go outside, I'll find a realtor maybe I know in my social circle, and I'll buy something here as a rental, and easy, right? And of course, it is very easy if you live in some parts of the country. It's not necessarily easy when you live in California or many expensive parts of the country, such as most of the West Coast and most of the Northeast, New York and some parts of the Northeast, where real estate around us starts at $750, $1 million plus. California is many times even more than that. So when you're at those high price points, you're encountering two problems. One, you need a large down payment relatively, right? And so not either you have it and it's great, but who says you want to put it all in one house? Or you don't even have it. And if you decide you want to buy locally, you're stuck because, okay, let me save for, I need 150,000 for a down payment. Let me wait until I have that. And then you're always chasing the prices because by the time you have 150, now you actually need 185, right? And by the time you have 185, you already need 200 and on and on. So we get very stuck with the options around us. Many of us, not all of us. And then you hear, or some guy with an accent talk about it, in a podcast, some guy, a friend of a friend, and you come to the realization there are other parts of the country that you can still buy quality real estate without the high, price tag. And by the way, not only they're cheaper, right? The rent ratio, the rent that that asset collects, it's by far better ratio than the rent you can collect on that local property. So that opens up people's mind to that idea. And by the way, when I say cheaper, cheaper does not mean worse. It just means they're less expensive or inexpensive markets around the country. And this is not going to bad neighborhoods or to like tough areas. This is going to the middle class parts of different metros around the country. But then you start asking yourself very difficult questions. Where should I go? Like which market? How do I pick one? How do I choose? How do I know an area? Who can help me find the right house? Who can help me evaluate and analyze it, right? Who will manage it? Oh, manage it. Oh my God, I need to work with property managers, but I heard all property managers are terrible and crooks, and they'll definitely take advantage of me. All those tons of questions are starting to pop up, and those are the questions you identify early on. Many more questions, will come up in the process, and that's the gap. That's the knowledge gap. That's the fear and knowledge gap. And that's where we try to come in and say, okay, we know there is knowledge and fear gap on execution. So that's something we help with, the knowledge and consulting and mentoring and kind of giving the direction and guidance. And this is why we call it guided real estate investing. So there's that bucket of knowledge, or closing the knowledge gap. The second gap is execution, because with all the respect to me and my knowledge and experience and the crashes, this sounds great, but how is this going to help me? Some guy who lives in, I don't know, in outside of LA or outside of San Francisco, where I have all those questions. All right, you gave me the answers, but what am I going to do with it? Like, who's going to be, what's next? So the second bucket is the bucket of execution. So we have vetted markets that we have a very clear protocol how to verify those markets. We have vetted teams on the ground in terms of property managers and realtors and mortgage people and more, right? And then we have a very clear process of vetting properties. So we have, in the real estate world, there's a term called turnkey properties, right? Here's a property, tenanted, you can buy it, great. We don't do turnkey properties. We do a turnkey operation, right? We don't have the property, but we have all the turnkey operators and support system to help you find that property. We will help you do that. Purchase it, cash, financing, what kind of financing, and go through the entire process of putting offers, going through the steps of the purchase process. But then we realized years back that there's a bit more support people need. And that additional support comes in the form of what happens when things will come up during the ownership phase, right? If you are an owner of real estate, things will come up. There's guarantee things will come up. It can be minimal things, such as, a tenant is being late or a vacant house. And it can be more, critical things like it's been vacant for 3 months, or I have a problem, with some foundation problem with my house, or water are coming into my basement. What am I going to do, right? Those are the type of things we have such an extensive experience. We tell all our clients, when you own that properties in the following years, we are here to continue to supporting you with things that will come up, small things, big things, at no additional cost. We see it as a proper support to our clients when they understand you are with me after I purchase, and I can call you. Sometimes they ask you, so if something happens in 2 years and we haven't spoken, I can just pick up the phone or send you an email and you will help me just like that. And I say, absolutely. And the funny thing is, sometimes when I don't speak to someone, maybe 2 years have passed or 3 years have passed since we last spoke, and they call with a problem, and like, I can't believe you're answering me and helping me with this issue. I told you I'll do that, right? And he goes, yes, you told me. I'm still pleasantly surprised you are here to do that. And I said, of course, that's exactly what I told you I would do. It's not easy, but I'm We have the knowledge, the experience, the bandwidth, the buying power with the local teams to help and leverage that to the individual benefit. So we continue supporting our clients throughout the ownership phase, which is years. And then if they want help with selling, 1031 exchange, different things, we are here to help them with that as well. Happily, many of them 5 years, 7 years, 10 years later, they're calling up. We may have spoken throughout that time, but all of a sudden the conversation is, I'm thinking of selling my house. What should I know? And I'm like, here's what you should know. Here's how you can maximize selling your house in terms of price, in terms of time. Why are you selling? Should you selling? When should you sell? Can you do some mechanism to defer taxes like a 1031 exchange? Is it relevant for you? Can you avoid it? Those are the type of things that we touch base with our clients later on. And many times they're like, okay, I'm ready for my next one, or I'm ready to sell this one and leverage it to 2 or 3 other houses because I've built so much equity. So for me, when people say start to end, for me, start to end is probably from before buying and after selling in a way.
So, Simply Do It is a business. How do you get compensated in all of this? It's a coaching program, so you buy into like a annually or per deal thing? Like, just be blunt about it. Like,
Yeah,
how does
absolutely.
that?
No problem. I try to be open and listen. I'll tell you, honestly, I tried many years ago to sell coaching program as a supplementary or complementary business. I'm terrible at it. I am not good at selling coaching programs. I think I have great coaching programs, but I'm very bad at selling them or offering them. And I thought this is not a good fit for me. So what we do is we connect our fee to actual transacting, right? So in a way, you can think about it as on-the-job training, coaching, while we are helping you buy, a rental property or duplex or fourplex or whatever. So there is a lot of mentorship and handholding and support but it's not in a people. If someone is thinking, oh, there's a structured program, we talk once a week, no, is you set the pace, how fast or slow you want to move with looking at properties and reviewing properties and making offers or not, and we are here to kind of make sure you are heading in the right direction, and we will just either proactively tell you what we think or just naturally the process will have multiple conversations. So the best way that I like to look at it is you're driving the car. Our agent that we work with in one of the markets sits right next to you because they're helping steering the transaction, because that's usually the heavy lifting of the process, and we are in the back seat. So that means I'm not, taking over the vehicle, but I'm making sure from the back seat, I'm a little bit like a backseat driver. I'm instructing, both to the agent and both to the buyer to make sure we are heading in the right direction. And I have a lot of experience. I've done well over 5,000 transactions. So I've gained experience, crash, COVID, flipping, different things. I found that a lot of all the agents that we work with, great people, experienced realtors, all of them, with no exception, they need help. They need someone to tell them, hey, have you thought about doing this? Have you thought about calling the seller in a certain situation and suggesting this or suggesting that? And all of a sudden, I've seen after, like, I mentor a lot of our agents to help them be better in what they do, because if they are better in what they do, they're helping our own clients, which is benefiting everybody. So a lot of our energy goes to help our agent, help our clients, or directly help our clients in the process of buying or post-buying, period. So
What's
that's
like,
kind of,
yeah. What's like the first common question somebody they get on the phone with you and hey, new to your company? Like, what's the first common thing you already know they're going to ask that you already have? Yeah, what is that?
yeah. And I owe you an answer about the fee because I didn't answer that. We can circle back to it. But well, we ask everybody to complete an intake before we meet. And one of the questions on the intake was, what are your fears? And very
Uh,
common is vacancy and property management, vacancy and property management. And that's probably the most fear people have is addressing those. There's always a question. There's always the what's the fashion or what's the question of the week, so to speak, or the period. And right now is the interest rate. Right now, the comment is I'm not sure I'm going to buy now, or maybe I'll use cash because the interest rate is so high, which I think it's a incorrect observation about the real estate being high. It's not, not completely correct, but not a full observation of it. But over time, property management is intimidating to people, and vacancy is intimidating to people. Do it remotely when they're
Yeah.
doing it remotely. Yeah.
How do you stay up to date with the latest trends and the market? What's your strategy, resources you use?
Yeah. I'm on the phone a lot and I communicate a lot with my teams. So I always get feedback from them. What's happening in your neck of the woods, what you're seeing. So this is the people on the ground that are either selling or managing properties, and they're telling me what they're encountering in terms of leasing, how quickly or slowly, with houses sitting on the market. So uh, I read articles, I listen to the news, of course. I try to spend some time on good, valuable content, kind of posts, bigger pocket or our Facebook, different groups, but not just in general. I'm really looking for those questions that I can see what people will come up with the answers regarding, like, something about the local economy or something, at large.
Yeah.
So that kind of helps to set the mood. I really like to look at economical aspect or economical aspect of investing, not as a philosophical conversation, which is important to have, but at some point the philosophical conversation is a debate, and you can say, I think it will go down, I think it will go up, or whatever, and we'll never come around to either an understanding or agreement. Is we're just going to continue justifying each other position, right? And eventually maybe even switch. But I like to take it to the more pragmatic level. All right, we can have a nice debate about the interest rate. You know what? You win. It's going to continue going up, although I think it's going to go down. What are you going now? Now that we spoke about it for half an hour, a philosophical discussion, what are you going to do about the facts that you just laid, in front of me about the interest rate, right? What is it? It doesn't help me just to debate. I want to take it one step down, and then to see, can I leverage what I know to do something with it? Because humbly, obviously, there's nothing I can do to impact the interest rate. So I need to learn how to work with whatever challenge. I'm just using interest rate as one of those challenges that everybody can relate to. How is this? There's manifest in my day-to-day real estate investing activity. Not only that, how is it manifesting in the different regions and territories we are operating in? Because that can be a different answer if I am in Austin versus, which I'm not, versus if I'm in Nashville or Kansas City, which I am, for example. So that's why I love having debates, but at some point I'm like, okay, I've reached my debatability, my limit. Now I need to think about, can we do something about it, or how do we operate in our market, with those constraints, challenges, etc.
What about a win? You got a win out there that has happened to you lately that something you're proud of, or
Yeah,
that?
yeah, absolutely. That's something. A lot of times people are intimidated by real estate of what can happen, and I have had so many situations when things turn better, much better than I expected. So, for example, I have a house that I bought as a flip in 2016 or 2017 for about 175,000, and I put about 35-ish, and there was some problem with something that the something with the permit that the GC did and didn't close the permit correctly, whatever, right? So it kind of hovered and annoyed, and we tried to sell it and it didn't sell. And then I said, you know what? Okay, I'm putting this $215,000, investment into the rental market, and I'll suck it up. I've been doing it long enough. I'll suck it up. It'll be okay. I still bought in a good place, in a good metro, everything. And the first renters that comes in, maybe not the first, the second, they pay. House been sitting vacant for a month and a half too. They take advantage of that. I get a very low rent relatively, and I am so bummed about it, right? It's not even breaking even. And
Wow.
then another year or two pass by, and all of a sudden, COVID, and I'm refinancing to a very low rate. So cash flow improves dramatically. And then rent starts climbing up. And what was 1650 a year or two ago is now 1950. And now it's actually to 2600. And all of a sudden, this house that I wanted to sell for, I don't know, 250 or 265, something like this, it's worth almost $500,000, right? They're just getting there. So, all it took some time, but all of a sudden you're like, I'm looking this house and it's a great house. And the tenant that's paying 2,600 is been there for 5 years or so, pays on time, takes really good care of the property. I was there in May. He just walked me around, say, hey, I did this and I did this, and I live here. It's important for me. I painted here and I did this. I hope it's okay. And like, yeah, it's okay, no problem. So that's for me. I was, I, I didn't do a lot of efforts except waiting and maybe some polishing a little bit and turning this lemon to a lemonade. And this lemonade is, it's not a lemonade, actually. It's a cow with a really quality milk.
Oil well.
Yeah, oil well, exactly. Yeah.
What's the best investment you've made in yourself? What was it?
So the best investment ever, I purchased my first flip at the auction in outside of Atlanta, Georgia. So live auction, probably 2014 or 15, something like that. Used a local team that I know. They go to the live auction. They put a bid. They get it for $30,000 and $30,001. Right? We're talking about the days those were available. A nice house, no problem. From the auction, I'm not even there with my cashier's checks, and I'm here. He calls me up and say, hey, we got this house. I used the cashier's checks for 30,000, but you owe me $1 because I have to put a dollar in. And then says, all right, we're heading to the house. I'll keep you posted. He calls me later and says, listen, here's the story. Long story short, someone was already living there. Whatever happened in their life, they lost their house. She was qualified to buy it. She told him, listen, the house, that's my house. I want to buy it. I'm qualified. I have a job. The team says, listen, here's an agent or use an agent. We want to keep everything very clean, really nice people. We're not going to take. Long story short, $30,000 plus change of insurance and property taxes. We sold that house 30 days to the 30 days exactly for $90,000, 3 times more, without seeing it only once, not lifting any single hammer, not doing any cleaning, any paint, nothing. 30 days. The house closed, and from 30 to 90, I mean, ROI wise, that's obviously, and I don't think I've had, when I flipped houses right after the crash, I've had few stories like this one. That's the best one, but I've had few of them. So those things do happen, but that's stories from the early 2012, 2013, 14. They are no longer around to have. So yeah, but that was amazing.
Good job. Nice.
Yeah.
So how can the listeners get a hold of you for any questions or investment opportunities?
Yeah, for sure. So first of all, anywhere you probably put simply do it. That's my web identity. Simply do it, or simply do it real estate. We have a YouTube channel. I put a lot of content out through YouTube and other media, mostly sharing, teaching, explaining. Not very good with sales pitching, but just sharing the information out. If you go to any of those, our website, which is simplydoit.net, or through all the social media, Simply Do It, you will end up finding me most likely. I'm out there a lot for many years with a lot of content, sharing. So if you reach out to us, by all means, if you have specific questions, we have webinars every once in a while. We'll be happy to share that with you, to talk to you, to see if this is a good fit, if we can help you. We don't take people that it's not a good fit for us. I know it sounds crazy, but we don't. Yeah, so simply do it.
Thank you for sharing your story, Danny. And everybody, thank you for listening. Please stay in, tune in for next time. Thank you.
Thank you. Thank you very much.
Thank you for listening to the SoCal Real Estate Development and Syndication Podcast. To stay in the loop of the next real estate opportunity, please email ppbarakov@hotmail.com. Have a great day. Do not forget to like, subscribe, and comment.